All right, now we're going to talk about double entry accounting. So if you remember the accounting equation, which was assets equals liability plus equity, if we do something to assets but don't do anything else to liability or equity, that doesn't follow the accounting equation. Remember, we have to have that equation equal. So in order to do that, we use what's called double entry accounting. And again, this is a way that forces the accounting equation to remain in balance. What we do to one side, we need to do to the other side, or we need to negate what we did to that one side. So for each transaction, at least two accounts are involved. That's really important, with at least one on the debit and one on the credit. So every time we do a transaction, you're going to have at least one debit and at least one credit. Now you can have 50 debits and one credit, or one debit and 50 credits. It doesn't matter. But at least one of each of those has to be true. Okay? And then the total amount of the debits in that transaction must also equal the total amount of the credits. So again, 1 and 1, it's easy. The numbers need to be the same. So if you have one debit, one credit, they need to be the same. If you have 50 debits and one credit, then the sum of those 50 debits in that one transaction has to equal the one credit that you have. And that is that's the rule of double entry accounting. And you will see this later on as we progress and do different things, how this actually comes to fruition. So that is double entry accounting.